What's going on, Augury investors? It is time to go into our second public portfolio analysis. Today we are going to do TSM. Shout out to Chance for the recommendation. We got a lot of recommendations coming up. I'm going to go through all of them, but let's jump right into TSM, which is the Taiwan Semiconductor Manufacturing Company out of Taiwan. First things first, we're going to dump it right into the portfolio just to see what we're going to get if we own $10,000 worth. So let me just open up the calculator and we're going to say the price is, so we're going to do $10,000 divided by 207.72, which is the current price. So that means we're going to be buying 48 shares. So we own 48 shares at the purchase price of 272. Right. Add that holding to our public portfolio. So this is how much our portfolio would generate as if it were one business. Let's just see here what we are getting. They have a lot of cash relative to Palantir, which Palantir is honestly one of the most expensive stocks that I've seen in a while. TSM is a lot cheaper, but not totally cheap. 10 times book. So I'm checking the market value, which is the price essentially, to the equity that we get. Revenue, I mean, this is trading at 12 times sales basically. Pretty expensive. Okay, profit margin. Okay, gross profit. A lot of CapEx. Relative to income. So that's important because CapEx means that they're spending a lot of money to grow the business generally, or replace equipment, property, plants, and that money keeps basically doesn't allow for that cash to come back to shareholders, which is important. But overall, looks like they had a large one-time expense or one-time bonus for some reason. So there is a one-timer. So these numbers are going to be slightly off. But regardless, our owner's yield is still only 4% if we own both of the companies that we've gone through so far, which is Palantir and TSM. Our goal personally is to get that owner's yield up to 15% or close to it while keeping and maintaining growth in the portfolio. Both of these companies are high growth companies. Let's jump into the analysis. The first thing that I like to do when I'm looking up a new ticker, I use briefing.com. It costs $60 a month, but it is a great tool. It could get you up to speed on what's going on quickly. So just a few days ago, President Trump announced 10% tariffs on Chinese imports that go into effect. They also tagged TSM. Now, if you guys don't know, China has already prepped for this to happen, and they have a bunch of firing power at their disposal at this time. So they have already announced that if Trump tries to, put a bunch of tariffs on their imports or exports, they are going to basically flood their banks with cash. There's a bunch of stimulus on the sidelines, kind of waiting. I think we find out in March if they're gonna, how much of that stimulus is actually getting put into play. All right, now what I'm looking for on briefing is simply just this right here. This is it. This is exactly what I'm looking for. So I'm going to read this. Taiwan Semiconductor Manufacturing rises on Q4 results underpinned by robust AI demand. So if you guys don't know, this is a semiconductor company. This is like Nvidia, but Taiwan Semi. And these guys are crushing it on the backs of AI. I'm going to read through all of this so you guys can get a really good idea. Chip manufacturing behemoth Taiwan Semiconductor's plus 5% is flirting with all-time highs reached earlier this month after delivering energetic Q4 results, including a healthy top line, bottom line beats, and a bullish Q1 revenue guidance. TSM, which supplies the chips used by most tech giants from Apple to Nvidia, has consistently benefited from an unwavering demand for AI. In 2024, revenue from AI accelerators, including AI GPUs, AI ASICs, and HBM controllers for training, more than tripled year over year. For 2025, TSM anticipates much of the same, forecasting revenue from AI accelerators to double off of an excellent 2024 base year, reflecting a continuous appetite for this technology in 2025. Headline earnings and sales were robust in Q4, expanding by 55% year over year. That's huge, and it's even more impressive because we're talking about $26.8 billion worth of volume. So that is huge. It's one thing to have revenue growth of small numbers. Let's just say it's easy to grow $1 million revenue by 55% relative to growing $26 billion by 55%. So expanding by 55% year over year to $2.24 and 37% to 26.88 billion, respectively. Aside from the AIoT and the DCE, digital consumer electronics, which fell by 15% and 6% year over year, respectively, growth was broad-based in Q4. In HPC, TSM's largest end market, revenue surged by 19%, accounting for 53% of the total revenue. Smartphone sales rose by 17%, comprising of over a third of revenues, while automotive sales inched 6% higher to account to 4%. So these are some insightful learnings that we're already getting from this. We can see smartphones are kind of heating up with these chips, and automotives are not really moving in the market. So this might lead you to maybe avoid automotive companies and, maybe look into some smartphone companies. AI demand was the underlying growth factor in Q4, consistent with the past several quarters. The company does not anticipate this letting up anytime soon, forecasting revenue growth from AI to approach mid-40 CAGR for the next 5 years. That's insane. That's crazy. Starting off a high base in 2024, TSM added that AI will likely be the strongest driver of HPC growth and the most significant contributor regarding overall incremental revenue growth over the next several years. With the AI wins at its back, TSM projected overall revenue growth to approach 20% CAGR over the next 5 years. This is the important one that we need to basically highlight because it's the overall company revenue growth at a 20% rate. So when we use to model this, that's what we're going to be using. Building off of a 34% jump in 2024. In the interim, TSM guided a $38 to $42 billion capital budget in 2025, a 34% lift year over year, reflecting anticipation of expanding demand from the many industry trends such as 5G, AI, and HPC. For Q1, TSM expects revenues between $25 billion and $25.8 billion and gross margins of 57 to 59%, a 100% basis point contraction at the midpoint due to ramping its overseas fabs, inflationary costs, and FX headwinds. While TSM's Q4 results were uplifting, they are not fueling much energy across the semiconductor landscape today, as many components experience mixed reactions. Today's unevenness is noticeable contrast to the broad-based strength witnessed after TSM's Q3 performance in mid-October. Even though AI continues to underpin impressive growth, the rest of the picture is hazy. For instance, TSM predicts mild growth across the PC and smartphone industry in 2025, suggesting a stubbornly shaky economic backdrop that continues to strain the end consumer. Still, TSM is confident that headwinds in 2025 will be short-lived, citing a shortened replacement cycle and increased silicon content as PCs and smartphones contain more AI functionality. As such, TSM is poised for steady upward momentum this year, barring economic deterioration, growing geopolitical tensions, or cracks on AI. Okay. So this is awesome. Like, this is why I love briefing.com. We just got a full plate of information that is immediately usable. So I'm going to go to the Augury site and I'm going to type in TSM. Now that I have that pulled up, we're going to go through the valuation of this. And at the same time, I'm going to pull up Guru Focus and we're going to go through some numbers so I could get a good idea as to what kind of business we are looking at in terms of attractiveness to owners. So this is a totally massive business. As we can see here, this is a $1 trillion company. Okay, that's what that says right here. This is a $1 trillion business. I usually like to stay away from these because they're really, basically everyone in the world owns these. So you're totally at the swings of the market versus something like, for a long time, I owned a small drug company that provided cows with drugs. And it was a $34 million market cap. And, if the market went up, the stock went up. But if the market went down, like, the stock wasn't affected because the business was so small and no one owned it. And everyone that owned it wanted to own it. Whereas this is something that's just layered and basically infested with institutional investors, and you get violent swings in some stocks like this because everybody owns it. So when people see the stock market going down, they sell their ETFs, and that causes forced selling on something like this. It's not the most important thing to consider, but it's something that I do consider. And it works on the reverse. So if, like, we do have big swings, maybe that is really opportunistic to buy at that time. But okay, let's go through this. Let's just take a look at the balance sheet. They have a ton of assets. They have a healthy balance sheet. They have, let's see how much cash they have. They have about $75 billion in cash and current liabilities of $38 billion. Awesome balance sheet. I would say that this is like a very solid balance sheet. Not speaking relative to the price tag, just speaking on the business's standalone basis. Is the balance sheet risky? The answer is no. The balance sheet is healthy. Now on to the income statement. Revenue, top line, huge number, $90 billion. Gross margin, 56%. They had hinted that Q1 is going to be around 55 to 57%. So that's going to be a nice bump because they're doing so much revenue. We're going to have a lot more gross profit going through this thing. And operating margins are truly terrific already. 45% operating margin. That is awesome. They have net interest income because they have so much cash and let's just see how much debt they have. Very little debt relative to cash. So they're earning interest on that cash. So that is making for an even stronger net income margin at 40%. So this is so far terrific. This is what you want to own in terms of a business. There are not many businesses with a 40% profit margin that are growing at a CAGR of 20 to 30%. And unfortunately, the PE is a little bit high. But we'll get to that in a second. Okay, so this is how we find out how much money we're actually going to make in this thing. We take 43 billion, which is a little bit, higher. So I'm actually going to bump this down to 36. So 36 billion. Let me pull out my calculator. We'll do 36. Control C. Okay. Hopefully you guys can see the calculator. So we're going to do 36 plus 20.6 and then minus the CapEx. CapEx is this. So minus, let's just call it 29.7, 29.7. So that gives us 26.9 billion. I'll clear that up. Oops, wrong button. So 26.9 billion divided by however many shares outstanding, which is, this is going to be 5.186 billion. So they're earning about $5.18 per share. So we're going to put that in the owner's earnings column, $5.18. Okay. Now let's see what the book value is. We already know that the book value, let me show you guys how to do that. I'm going to take the shareholders' equity, which is, get our calculator out again. And we're going to replace the earnings by the book value, which is 131.654 billion. You don't have to be this precise either. So $25.38 a share. $25.38 per share. Now, we already know that the company is going to grow at 20% over the next 5 years, CAGR. That's what the company has basically told us as investors. This seems like it's not going to be going anywhere anytime soon. So let's just also put in the 15 years of the terminal stage. And let's say that they do average about 8.5% growth over the next 20 years, which would be a totally massive business. It probably, let's try to be a little bit more accurate here. I think it'll be a little bit more like 6.5%. Or maybe even 5.5%, to be completely honest. So just like that, we can see here, okay, so the value of the stock is about 146, according to Tyler. So I'm going to go here, open up my watch list, and we already have, move this to the right for us. I'm going to open this up. So we already have a public portfolio watch list, and this is where the feature of this website that I've created really starts to come into play. We're going to add an entry, and we're going to say TSM, and we're looking to own the business, and let's call it a 4-year hold. So it'll be 262029. Our entry price is 208.57. Our price target 1 is exactly what we just found here. This is what we think is like the most likely scenario, which is going to be worth $146.62. I'm going to put 30% probability of that. Next, let's say that the true growth rate, they're telling us it's going to be 20%, but let's say it ends up being an average of 25% over the next 5 years. And let's put this at 6.5%, because I don't think that's impossible. In that scenario, the stock is probably worth around $178.80 per share. And now let's have a really high growth rate here of 30%. And then let's say that they grow at 12.5% over the next 15 years. So this is a very bullish scenario. In that case, TSM stock is actually worth $284.76, and it's currently trading at $208.57. Okay, so in that scenario, in that universe, right, there's so many different ways that this can go. When trying to predict the future, you have to think probabilistically, and there is a chance that this could be undervalued. Now, let's take a look at the worst case scenario. So again, I don't think, I think that they're going to be probably spot on with that 20, like forecasting the next 5 years. But after that is really the concern. And let's just say that they grow at the rate of inflation. And this scenario is going to give us what is the real downside. Like, worst case scenario, they're going to make money. The business is going to make money. But then again, here's another thing that we might want to consider because we're investing and we're trying to think about all of the possible scenarios. So there's a thinking tactic called thinking in extremes. What is the totally best thing that can happen? What is the totally worst thing that can happen? It's hard for a TSM to get bought out because it's $1 trillion company. They don't have that upside possibility. Apple's not buying them out. Probably, if anyone ever tried to buy them out, A, who's going to come up with all that money? B, it's probably going to get blocked, right? The regulatory parties are not going to let that happen. But but on the downside, if we think in extremes, there is this huge idea that China wants to take over Taiwan. In fact, China is claiming that Taiwan is theirs. They have been claiming this. And a lot of speculation has gone on and like what will happen to TSM if something like that ever happened. There's like ideas that they would like destroy parts of the business and all this crazy stuff. That is a real risk in a sense. I know it sounds like far-fetched and maybe not happen, but might not happen, but it's something that we need to consider when making an investment. So let's see what this is. Let's say like the downside is 125, and then let's also just include the risk of something crazy. So I'm just going to put this here at 125.4 for now. And then let's just say like, dude, what would happen if these guys did grow spectacularly, at 25% for 5 years, but then there is an issue and, China does invade Taiwan and take it over within 8 years. So after 8 years, okay, let's see what the business is worth at that point. Only 89, 87. That's a lot of downside. It's 56.9% downside. So let's call it 100 as a stop out, and let's put the probability at 50. So situation, TSM is banking off of AI. Truly spectacular business with 40% profit margins. ... Insane. That's crazy. But shares are not cheap relative to cheap when factoring risk scenarios such as China, Taiwan relations, Taiwan. Notes. So I'll go thesis. Would love to own this. If the business was selling at a cheaper price, but so expensive and could face swings of the crowd. What I mean by that is just like because everyone owns it as $1 trillion business. Notes. Do I have any notes? AI, huge winner. That should be good enough for now. We're going to add that right to our watch list. I'm going to refresh the page so the price updates, or just hit that button rather. And we can see that this is also not an edge bet. Okay, we do not have, this is, broken. I don't know why. I need to refresh it. But anyway, the Augury score is 0. This is, again, another non-edge bet for us. We cannot buy this at the current price. So again, we're 0 for 2 so far in the portfolio with finding good investments, but this is part of the game of investing. You continue to look through company after company after company after company, and eventually you'll start to find some really good investments that we can get into our portfolio that are going to help our portfolios grow. Eventually, we are going to have some awesome investments in here if we just keep doing the work and showing up every single day and building out this watch list. And the good thing about this watch list is going to tell you exactly what is the best opportunity to put your money into at any given time based on the value and how quickly you're going to turn that investment to cash. So that's TSM. I hope you guys enjoyed this one. I will see you in the next one. Peace.